Hello, everybody, and welcome to this UKCF Fringe event, part of Good Money Week. We have all become very, very used to, over the last year, 18 months, to these kind of Zoom webinars. At some stage, everyone will actually meet in person, and we'll have to remember how you actually do that properly. But for the time being, we've got very, very used to this. We sort of know how all this works. My name is Darren McKenzie. I'm going to be moderating this event. I work at Global Canopy. I'm going to be leading the discussion today to introduce you all to the Aligned Accountability Project. And it is a project that we're really excited about. It's a groundbreaking initiative, the aim of which is to fill the deforestation data gap. So according to a survey done this year by Credit Suisse and Responsible Investor, 70% of investors say that a lack of available data is a key barrier to making investments supporting biodiversity. But there is data out there. And what Aligned Accountability does is it brings all of that essential data together from separate initiatives and puts it all into one space. And what we want this to be is we want it to be a game changer. So today you're going to hear from 3 of the data initiatives involved in this project. So Trase Finance, ZSL SPOTT, and Forest 500. The reason this is so important is because there's now this growing expectation that financial institutions have to investigate environmental and social credentials of their investments and of their clients. And there's an expectation from everybody that they should start doing this. So last week, Mark Carney said that by COP26, the world is going to know which banks, which asset managers, which asset owners are part of the solution to climate change and which remain part of the problem. So by the end of this session, what we hope is that we will have shown that there is data out there to address deforestation risks for financial institutions. We will show that this groundbreaking Aligned Accountability Project is the go-to source for credible data on deforestation, and it's going to help financial institutions better understand climate and deforestation risks. It's an interactive session. It's about finding solutions. Hopefully we are here to answer your questions. We want it to be a conversation. So over the next hour, if you want to ask something, just put a question in the chat window and we will get to you. I am based in Lancashire, just down the road from me, and so I'm in the UK. Just down the road from me in Manchester is the Conservative Party conference. So that's a lot of politicians talking. Our challenge is to make this event more interesting than a panel discussion with Nadine Dorris. She is our direct competition now. So that's the challenge for all of us. The slightly serious point that I'm trying to make is actually now the people that are looking at this space are politicians. Okay, the UK Prime Minister Boris Johnson said last week, halting devastating deforestation is a key theme to COP26. That's great news for organisations like Global Canopy. We've been talking about devastating deforestation for 20 years. It's good that it's on the agenda, but it's got to be more than on the agenda. Deforestation actually has to stop. So I've rabbited on for a bit. Let me hand over to actually some experts. James Daff is working with us here at Global Canopy. He's leading engagement on the Aligned Accountability Project with the finance sector. James, just start, I suppose, by setting out the stall. Why do financial institutions need to address deforestation?
Thank you, Darren. Hopefully everyone can hear me. I'm sorry I'm speaking virtually, but as Darren says, that is the nature of the beast at the moment. As you said, my name is James Dath. I'm an independent consultant working with Global Canopy on the exciting Aligned Accountability Project, particularly engaging with the financial institutions on that. Just to reiterate Darren's point, it's impossible to overstate the importance of tackling deforestation. in simple terms, without a solution to deforestation, there is no solution to the growing climate and nature crisis that we currently find ourselves. All the many potential pathways to limiting global warming to 1.5 degrees rely on maintaining forests as carbon sinks, and unfortunately, global deforestation is accelerating. So it's vital that we address this collectively, and part of that is enabling companies, but financial institutions, to have a better access to robust data. I just wanted to, I guess, contextualize this, will hopefully make some sense to you. It wasn't that long ago that environmental considerations were so seen as only being virtuous and merely sort of tangential pieces of the economic equation. But it's absolutely clear that issues like deforestation have very material impacts on economic growth. A report by the World Economic Forum found that more than half of global GDP, which is $44 trillion, is moderately or highly dependent on nature. So in other words, nature loss has extensive implications for companies and indeed the financial institutions that lend or invest in them. So it is clear then that being environmentally responsible is fast becoming a corporate necessity. And within that, understanding and addressing exposures to deforestation sit at the very heart of it. So as enablers of global capital flows, it's therefore imperative for financial institutions to accurately assess the risks from deforestation to which they are exposed, directly and probably more likely indirectly. Because underestimating or indeed mispricing these risks will lead to, sadly, the continued damage to our planet, but perhaps more pertinently for the institutions, it will threaten their own balance sheets and financial stability. An assessment by Forest 500, which you'll be hearing about later from my colleague Emma at Global Canopy, did an assessment that found that 150 financial institutions provide over $5.5 trillion of finance to the 350 most influential companies in forest risk supply chains. And more relevant to the UK, in the UK, financial institutions have more than 4.6 billion invested in just 6 of the agribusinesses most exposed to deforestation. So it's absolutely clear here that there's a strong responsibility for financial institutions to really understand their exposures. Now we've seen tremendous strides in the development and adoption of sustainable finance over the last 10 years. And within this, managing environmental factors has obviously become a core component of measuring a company's sustainability. As I said, it's pretty clear that companies that neglect the effects of their policies and indeed practices on the environment are exposed to greater financial risks. And that, examples of that would be probably, lower profitability, reduced cash flow, or indeed, stranded assets. And from the financial institutions' perspective, risk management, without hyperbole, is an essential task, and it forms the basis of financial stability. So typically financial institutions, understand risk like perhaps no other institution. They manage risks like credit risk, liquidity, or indeed market risk through very rigid and structured frameworks. But the integration of environment-related factors like deforestation in the decision-making processes, unfortunately, remains pretty limited. So why is that? As a concept, within the ESG, deforestation has historically been kind of marginalized. It's been sort of aggregated with other factors. Direct exposures are heavily sector specific, concentrated to the likes of mining, agriculture, and logging. But it's been way harder to understand indirect exposures. And the well-worn phrase, which I'm sure you're all aware, you can only manage what you can measure, which is hugely relevant here, because getting enough granularity on deforestation data to be able to build detailed policies and sort of risk metrics has been notoriously difficult. So sort of much like ESG disclosures in the past, what to disclose, why to disclose, and how to disclose, with regards to deforestation have been addressed differently by different companies and sectors and indeed geographic regions. And as such, sort of the different data sets that have come through to try to capture these different exposures have very different uses, and so are difficult, I suppose, in some ways to use together. So there has been a sort of lack of a common framework to communicate the standards and practices linked to deforestation, together with, of course, the lack of real standardization of benchmarks and policies, creates real kind of challenges for investors to account for deforestation risk. Again, referencing the Forest 500, assessment found that 95 financial institutions providing 2.7 trillion of financing to the most influential high-risk companies did not have explicit commitments on deforestation. And we see that across the finance sector. There will be mention of deforestation within particular exposure to particular sectors, but by and large, there isn't that sort of group-wide, company-wide policies around it, because it is very nuanced and it has been very difficult to get an understanding of it. So hence why the launch of the Aligned Accountability Project at this juncture is so important and so exciting. Particularly when the sort of the integration of the engagement of ESG in financial markets. There seems to be this sort of this collective draw of breath to, okay, what is it we're all trying to do? How are we trying to do this? Is our current engagement levels effective? What do we need to do better? There are calls of greenwashing because funds and certain companies are being accused of perhaps not really walking the walk that they're talking. And so being able to access greater data points and data sets with something as key as deforestation is going to be hugely important for financial institutions. So it's fantastic, exciting that we're at this point of the launching of the accountability of the Aligned Accountability Project, and I'm really excited to be part of this. Just before I do hand over to Sarah just to walk through in detail about the project, it's important to say that part of it, there is a working group made up of financial institutions who are there, I guess, to ensure that the project is credible and relevant to the end users, i.e. the financial institutions. And so we are relying or getting a lot of feedback from them. But there will also be an observer group who will be keeping in touch on a regular basis with the outputs of the project, and there will be the odd opportunity to feedback into the work. So if any of you have any interest in being kept up to date with the work of the project, please let us know at some point, and I'd be very happy to keep you informed. I'll pass over back to Darren and probably over to Sarah. Thank you.
Thanks very much. And just to remind you, kind of this is interactive. We do want to answer questions. If you've got them, just put them in the chat, put them in the Q&A section, and we will get to them at the end. So that's why financial institutions need to act. Let's now get into the specifics, I suppose. The Aligned Accountability Initiative. Sarah Rogerson leads our corporate performance work at Global Canopy. Sarah, this is your moment to sell the project.
Thanks, Ciaran, and thanks, James, for the introduction and the background. So as Darren has said, I have the pleasure of introducing our project Aligned Accountability and what we're aiming to achieve with it. Next slide, please. So firstly, to briefly set the scene, as Darren mentioned, lack of data is often quoted as a key barrier for financial institutions trying to act on sustainability, but also particularly on deforestation. But there actually are many data sets that do already exist that can help financial institutions to understand and to act on their exposure to deforestation. So what I've put up on the slide are 4 challenges that we often hear from the finance sector when trying to use these different data sets and tools that kind of give them a picture of company performance on deforestation. So firstly, we get the feedback that there are multiple tools with different methodologies, sometimes give companies different scores, and that presents a confusing picture to the users. Sometimes they contradict each other, and it's not clear how the data user should act based on that information. We also hear sometimes there's limited accessibility of the data, so it's difficult for a financial institution to maybe download the data and then to integrate it into their own systems, their own internal processes. We also hear that the coverage of these data sets and these initiatives is limited, and that then presents challenges to financial institutions who might be looking across huge portfolios with thousands of companies in their universe. So these tools are then limited to kind of more individual engagement approaches and can't be used for portfolio screening. And then the final point on data sets on policy and exposure are not connected with each other, but also that there are limitations in the assessments of company performance, that focusing on policies and commitments and reporting and not really getting at the true assessments of impact. So I wanted to bring these 4 up because these are 4 challenges that Aligned Accountability aims to address. So I'll now talk about how we are going to do that. Next slide, please. So Aligned Accountability is a partnership project. It's led by Global Canopy and ZSL SPOTT, but there are many other partners, including those on the screen and some on the call, who are really key to making this work. It's all about bringing these organizations together. And of course, we can't forget the really generous funding of the Norwegian International Climate and Forest Initiative, without which we just wouldn't be here. The plan is we're going to create a common database to bring together the existing data sets on company performance on deforestation. So we want to bring them all into one place to make it easier to access all of this information. Connecting the existing data sets will also allow us to get a greater coverage of companies, bringing all those different samples together. And because we'll be bringing in complementary data sources, it'll also give us a better picture of individual companies' performance. So we'll be bringing together data sets on company commitments, their policies, their reporting on progress from Forest 500 and ZSL SPOTT, which we'll hear more about later. And this is building out on data that Global Canopy and ZSL have been collecting since 2014. But we'll also connect that with company reporting on certification and also with data sets on exposure from, for instance, Trase and Trase Finance. All of the partners on this project are working with the accountability framework that is another key partner. We're part of a working group to align and develop a common methodology for assessing company performance on deforestation, aligned with the accountability framework industry standard guidance. So obviously aligning closer together has benefits for connecting our data sets up, but we're also now working with the accountability framework to develop better metrics of company outcomes, so moving to a better assessment of company impact. Our target audience for this database is the finance sector, as we see such a huge opportunity to accelerate action from finance to then drive change in company practices. And we also see that financial institutions, some are already asking for this data. And also in some cases, we see financial institutions already trying to bring these different data sets together themselves and work out how they fit together. So we want to help streamline that process. Critically, we'll also want to focus on uptake into ESG ratings agencies to get it used in existing rankings that currently don't cover deforestation very well, and to really mainstream the uptake of this information. So just briefly, I'd like to go back to those 4 challenges that I put up and talk about how we'll address each one. So multiple tools with different methodologies and scores, obviously working with the accountability framework to align with a common methodology means that we'll all start to use the same framework and the database will really build off that. Accessibility of data, we'll be working with the group of financial institutions that James mentioned to work out the best way to present the data for them. How do they need to access it? Is it through APIs or downloads? Limited coverage of companies and sectors. So by bringing the data together, we'll not only be getting greater coverage, bringing those different samples together, but we'll also be in a better place to assess the gaps and then work together as a partnership to start to fill in some of those gaps and expand our data collection. And finally, obviously a core part of aligned accountability is connecting these different types of data sets, exposure and commitments and reporting, but also the work that we will continue to do with the accountability framework will get us closer and closer to better assessments of company impact. And we will continue to develop the database and update the data points in there to align with best practice. Thank you. I'll hand back to Darren.
I just want to keep you on the spot for a tiny bit longer, but could this be a game changer in the sense of, is this the first time that so much data for financial institutions has been in one place, a kind of a one-stop shop?
Yeah, absolutely. We've worked with some partners on the call in the past to bring together different data points from each of our data sets that give a better picture of company performance, starting to do analyses or against other frameworks. But this would be the first time that we're really bringing together all the data points from each data set and starting to, as you say, put it in that one-stop shop to really get that depth of information.
Thank you. So as we've been hearing, aligned accountability is a partnership. It's organisations working together to solve a data problem. So now it's time to hear from the partners. Ciaran Raymer is a project manager at the FinTech Neural Alpha. They work with us at Global Canopy and the Stockholm Environment Institute, SEI, on a project called Trase Finance, which is going to be key to this project. So Ciaran, tell us how Trase Finance fits in.
Thanks very much, Darren. Before jumping straight into the finance aspect of Trase, I'd like to give some very quick context around the Trase initiative itself. Can I go to the next slide, please? So Trase is an independent and science-based supply chain transparency initiative that's seeking to transform our understanding of the sustainability around commodity supply chains. There are 3 core pillars to the offering: the supply chains, which delivers a unique mapping of agricultural commodities supply chains; finance, which adds to this by mapping company ownership, as well as capital flows, such as investments and lending; and insights, a repository of analytics and examples of how the initiative is applied by users, giving them a visibility of their exposure to deforestation risk. Next slide, please. If we can play the video, please. Thank you. So the Trase Finance platform builds on the Trase supply chain's unique mapping capabilities, linking production regions, trading companies, and export markets for the entirety of trade in individual soft commodities that drive deforestation. The database and tool are unique in enabling financial institutions to systematically identify their direct and indirect exposure to deforestation risk. This allows them to improve the sustainability of their portfolios At the same time, it enables civil society and governments to strengthen accountability of commodity financing and monitor programs against policy commitments. The Trase Finance platform was launched in October 2020 with a beta data platform that brings unparalleled transparency to the hundreds of billions of dollars that directly and indirectly finance tropical deforestation each year in the form of loans, bonds, and equity. It synthesizes dozens of disparate data sources covering ownership, lending, and company legal structures of organizations involved in the trade of Indonesian palm oil, Brazilian beef, and Brazilian soy to provide groundbreaking intelligence for more sustainable finance. Now, this presentation was just a taster of what the insights that you can derive from the platform. Much more can be said, and I'll leave it to the audience to ask any questions that they have. Back to you, Darren.
Thank you. Trase, the original Trase platform has been with us for a number of years. Trase Finance is slightly newer. I mean, it's been going for around about a year. It won Innovation of the Year at the Environmental Finance Awards. How much appetite is there from sort of financial institutions for this new tool? Do you have any can you assess that yet?
We're looking into it. The need for data and transparency into the supply chains, the flows of finances, lending, bonds, loans, is becoming more and more important for institutions, especially as regulations increase in the lines of ESG and sustainable or green finance. We're getting a sense from the market that more and more this kind of data is being requested and the demand is growing for it.
Fabulous, thank you. We are getting some questions in. What I'm going to do is I'm going to sort of let, we've got a couple more of examples of the data initiatives that are being used in the Aligned Accountability Project. So I'll get through those first, and then we'll get to sort of individual questions. So another partner in this project is the Zoological Society of London, ZSL. Sam Ginger is a project analyst on ZSL's Sustainable Business and Finance Programme, specifically working on the SPOTT project. Sam, tell us about these assessments and tell us how they're going to feed into the Aligned Accountability Project.
Yes, thanks very much, Darren. So hello, everyone. Yes, my name's Sam. I work for ZSL SPOTT. So established in 2014, SPOTT is a free online platform which is dedicated to supporting transparency of upstream tropical commodity companies. So we assess some of the most influential players across palm oil, timber and pulp, and natural rubber sectors. So if we could head to the next slide, please, that would be great. Thank you. And we assess them against their public disclosures of policies, operations, and practices, so their progress against these targets that they've set in policies. And we assess them across 10 different ESG categories, which you can see on the right-hand side here. So these categories span many different topics, such as monitoring deforestation, but also recognising community rights and governance disclosures, such as reporting grievances as well. So SPOTT data is then used by financial institutions and downstream supply chain actors to inform their business decisions. So if you could head to the next slide, please. So this is a little bit of what our website looks like currently. This is the palm oil scorecard. So you can see companies vary quite substantially in score and therefore in their ESG disclosures. And so by clicking on each company, you'll be able to explore each of those company assessments in more detail. And our scorecards are updated annually as well. So if we could have the next slide, please. Thank you. So who is assessed by SPOTT? I've already mentioned the 3 different commodities, but we have 100 palm oil companies, 100 timber and pulp, and 15 natural rubber companies as well. We assess both private and publicly listed companies, and here you can see the split between the commodities too. Each year we review the companies included in our assessments to account for different circumstances such as mergers or acquisitions. And additionally, when capacity allows, we add more companies. So For example, this year we're actually expanding our scope of the rubber companies to include 30 producers, traders, and we're also going to be moving on to different supply chain segments as well within that. But how do we then select these companies in the first place? So we prioritize countries with high biodiverse ecosystems. So parts of South America, the Congo Basin, and Southeast Asia, they're all top of our list. So we look at the scale of operations of these different companies to ensure we're capturing the most influential ones within the sector. So a producer with 500,000 hectares of forest is definitely going to take precedence over one with 10,000 hectares of forest that they're managing. And we also look at nominations by interested stakeholders. So this could be the companies volunteering themselves, although that doesn't really happen that often. But it could also be financial institutions and, of course, spot users as well, and NGOs too. It's important to note that our assessments are also based on publicly available information, so we don't necessarily require consent for a company to be assessed. But how do we then assess these companies that we've selected? So if we could move on to the next slide, please. So we assess these companies against over 100 indicators for each commodity spanning the ESG categories we saw earlier. So we search for publicly available sources of information only, so primarily the company's websites, their sustainability and annual reports, and also information from certification scheme audits too. Nothing is submitted to Spot privately. So indicators cover policy commitments and evidence of their implementation. So are companies that are committed to zero deforestation publicly disclosing actually how they monitor this deforestation in their supply chains and how often are they doing it as well. So in these instances, we would award a higher score for third-party verification of that information, which will give that higher level of assurance. Can we move to the next slide, please? So after we finished our initial assessment, we then give companies a copy of their draft assessment and invite their comments. So this gives them the opportunity to understand the industry expectations, but also they can respond to us and improve their disclosures ahead of the final review and publication on Spot. Our approach means that every company assessed on Spot actually has the opportunity to engage with a specialist team on key ESG issues. So our users and supporters can also then, after that, engage with companies and add weight to Spot and also amplify our call for transparency. Could we head to the next slide, please? Additionally, on our website, in addition to our annual assessments, we publish reports which explore these themes, and we also publish guidance on supporting transparency in forest risk commodities. So our data is currently downloadable from spot.org, but we'll also make it available through the Aligned Accountability Project as well. And next slide, please. Thank you very much. Back to Darren.
Thank you very much, Sam. That was fascinating. Can you just outline in a tiny bit more detail, I suppose, what type of institution do you want to be using your data? And then how can it help them make better choices, which I suppose is the ultimate aim?
Yeah, of course. So our data can be used by investors, but also buyers as well of the commodities and other key stakeholders in these different supply chains. And they can use the data to then inform their stakeholder engagement, so then they can manage their risk more effectively. So as was mentioned in our other presentations and by James at the beginning, these companies or these institutions are exposed to greater financial risks if they know it within their investment portfolios that they have companies that are fueling deforestation. So this is something that can definitely help support them identifying those gaps, but also helping them engage with those companies as well. to hopefully improve practices. Yeah.
Fine, excellent. Now let's look at the Forest 500. That's one of Global Canopy's projects. Emma Thomson is in charge of it. Emma, I think January is the 8th year of the Forest 500. So that means you're very, very busy, and I can't believe you've got time to sit here and talk to us, but thank you. So tell us about Forest 500 and how it's involved in this project.
Yeah, thanks, Ciaran, and hi, everyone. Yeah, if I could have the next slide, please. Thank you. Yeah, so it's our 8th year. So Forest 500 started in 2014, so the same year as SPOTT, and we were started to hold companies and financial institutions accountable to their voluntary deforestation commitments, so such as those made as part of the New York Declaration on Forests and the Consumer Goods Forum. It's an annual assessment of the 350 companies and 150 financial institutions that have the greatest influence on tropical deforestation based on their exposure to the 6 highest forest risk commodities. Could I have the next slide, please? Thank you. We select the Forest 500 every 2 years, and we start by identifying the 350 companies. So to identify their exposure to the highest forest risk commodities, we first identified the tropical countries with the greatest forest loss since 2010. So in our latest round of assessments or selection, which was in 2019, these producer countries represented 88% of tropical deforestation. So once we've identified those producer countries, we then look at the trading countries. So the countries that are importing and exporting the highest value of each of the 6 commodities that we look at. So that is palm oil, soy, beef, leather, timber, and pulp and paper. And we use this information as a guide to select those 350 companies. I could have the next slide, please. Thank you. I think if you click one more time. Thank you. So as you can see from this slide, we select companies at each stage of the supply chain. So from producers through to traders through to retailers. And depending on which commodity we're looking at and which segment of the supply chain, we use different data and metrics to identify their exposure. So this includes metrics like land bank area owned, market share of relevant markets, or ideally, the volume of commodity that that company handles. So each of the 350 companies we select are included in the Forest 500 based on their exposure for at least one of those 6 commodities. But when we are assessing the companies, we do assess them on any of the 6 commodities that they are exposed to through their supply chains. Next slide, please. Once we've identified those 350 companies, we then identify the 150 financial institutions that are providing the most finance to those 350 companies through shareholdings, loans and underwritings, and bond holdings. And for each of the financial institutions, we assess them for 4 commodities, so palm oil, soy, cattle products, which includes beef and leather, and also timber products, which encompasses timber and pulp and paper. Next slide, please. So moving on to the assessments themselves, we assess each of the companies and financial institutions annually, and we assess them on the strength and implementation of their policies and commitments on deforestation and associated social issues. We use 2 different methodologies to do this. One for companies, which looks at their commitments that they apply to their supply chains, and one for financial institutions, which looks at the policies they apply to the clients that they finance. So both of our methodologies are assessing companies and financial institutions against best practice for the sector, and our company methodology is aligned with the Accountability Framework's common methodology. And yeah, all of our assessments are done using only publicly available information. So anything that the companies and financial institutions have published on their website is taken into account in their assessment, provided that it was online during the time of our assessment period. To make sure that we are assessing all companies and financial institutions fairly, we work with a team of language consultants to ensure that the assessments are conducted in the native language of the country where the company or financial institution is headquartered. And then, as Ciaran said, every year we publish our entire data set on our website. So this is currently scheduled for January. And here, all of our assessment data is accessible, as it will be on the aligned accountability. And I will now go through some of the kind of use cases of this data in particular. If I could have the next slide, please. Thank you. So yeah, there are lots of different ways that the Forest 500 data can be used, but today I'm just going to focus on 3 in particular. So the first of which is that the data can be used to identify high-risk clients or holdings or suppliers. So each company and financial institution is identified as having the greatest influence or the greatest exposure to at least one of the 6 high-risk soft commodities, meaning that their inclusion in the Forest 500 is indicative of their exposure to deforestation risk. So through the selection process, which we then combine with the assessment of the commitment strength and implementation, we can use this data in high level as well as in-depth risk assessments of both clients and holdings and suppliers as well. Next slide, please. Thank you. So the data can also be used by companies and financial institutions to benchmark themselves against others, or by third parties to benchmark the companies and financial institutions against each other. So as the strength and implementation of their commitments and policies can be compared between companies and financial institutions, this can also be done for their scores. So either the score for each indicator, the score for each commodity, or their total score. And as they are all given a score, completely comparable across all 500. As you can see on the screen, our data also provides quotes and links to the commitment or policy that was scored, which means that the data enables you to be able to dig deeper into the detail of what companies and financial institutions are doing to address their exposure to deforestation risk and associated human rights issues. I could have the next slide, please. Thank you. And a final key use for the Forest 500 data that I want to talk about is as a tool for engagement with clients and holdings or with suppliers. So as the companies and financial institutions are all assessed against best practice, where they don't score full points for a specific indicator, it highlights a gap in their approach to deforestation. So this means that the methodology and the assessments can be used to show what actions the company or financial institution can take next to ensure that they're making progress and improving their approach. So it's a really useful tool for engagement. And I think that is everything on Forest 500 for now. So I will hand back to Darren. Thank you.
Thank you very much. I just wonder, because I put everybody else on the spot, I'll do exactly the same with you. And it's something that Sam spoke about as well, about one of the things that ZSL SPOTT does is it only uses publicly available data that companies put on their own sites. And I know that's something that the Forest 500 uses as well. Mm-hmm. Can you just, why is that?
Yeah, so of course it's important that companies and financial institutions are acting on deforestation and associated social issues in general, but it's really important that those commitments are made public so that the bank, the financial institution or the company can be held accountable, so that it sends a clear message to other financial institutions and companies that deforestation is a big issue that they should be acting on. And it kind of, by publicizing it, it really raises the bar for the other companies and financial institutions. So we encourage, we only use publicly available information for that reason, to really just push for that transparency that's needed to achieve deforestation-free supply chains.
Okay, fabulous, thank you. I'm going to hand back to Sarah, just to, I suppose, reiterate, go over the project. I mean, just sort of summarize what we are trying to achieve here.
Yeah, thanks, Darren. I just want to say a huge thanks to Ciaran, Sam and Emma. Yeah, it's just really great to see these tools and hear how useful they are to financial institutions individually, and just really drives home, you know, what we're trying to do with aligned accountability, bring those data sets together, make it easier for the common audience that we have with these tools to understand how those data sets fit together, and to be able to use it as one when relevant, you know, when they do need to try and bring these data sets together. Yeah, I'm just really excited to be working with you all, and kind of also brings us all the benefits of getting better alignment, you know, continuing that work together, and increasing our coverage and our depth for companies on this type of data. So yeah, really thanks everyone for speaking today.
Thank you, Sarah. So that gives us about just over 10 minutes of questions. If you've got any questions, if you want to put people on the spot, this is absolutely your opportunity. We've just had sort of a whistle-stop introduction, really, to Trase Finance, to ZSL SPOTT, to Forest 500. So those sort of three key components. We've got a question already, and Sarah, I wonder whether it's good for you to take this about financial institutions. That is a big term that covers a whole load of very different companies. So how are you going to make sure that this project's data is useful to each type of financial institution? So a bank, an impact investor, and a pension fund, you know, they've all got different internal processes. How are you going to make it useful? How can you make this project work in one space for all of those different organizations?
Thanks. Yeah, it's a really great question. So I think James mentioned earlier that we've set up a working group of financial institutions to work really closely with on aligned accountability, to make sure that as we're building this database, we're designing it with them in mind. So it's been a big priority for us to make sure that all those different types of financial institutions that you mentioned are represented within that working group, so we can hear those different perspectives as we're starting this process. So making sure that it's built, it's structured, it's accessible in the right way for all those different use cases that those different institutions have. In terms of data, again, we're pulling in all the data points that these different tools provide, but we're also, we'll want to make it as user friendly and as easy to kind of pull out a snapshot of company performance for across the universe of companies that will be in the database. And again, we'll be working with this working group that we've set up to understand what are the key data points that they need in order to make decisions on company performance to influence their financial decisions. So yeah, we'll be hearing from all those different types of financial institutions. Do they need different data points? What are they? And how can we make sure that the database does give them what they need?
Thank you. James, can I ask you if, so you part of your role in this project is about, I want to know if 2021 feels different in that we've been working in this field for some time. There have been pledges, there have been commitments to change in the past from financial institutions, from companies. Does this feel like a different time and a different space? Does it feel like the time is right for a project like this to work because financial institutions are saying, look, we really need this?
Thank you, Darren. So the short answer is yes, the full stop. But the slightly longer-winded answer is absolutely, in that, we've had a number of numerous different initiatives, numerous different promises, engagements, and to be frank, if you look back over a longer period, some of those haven't really had the desired effects that people were looking for. But if you tie this into the broader picture with the general public's understanding and level of engagement and wanting to really address key issues globally, you can see that people's priorities now are really changing and putting the environmental piece, really at the forefront of considerations. And the fact that we have greater access to more sophisticated data sets enables financial institutions to really map the materiality with these points, which enables greater sophistication. So absolutely, this is a key part of this, and we're at a key junction, and definitely feels different now. And there's a lot more movement and a lot more progress happening at this point.
Can somebody, and I don't know who would like to tell me, but talk to me about timeframes, about, you know, collectively, we have created this project. When do we want to see, change? And when can we say aligned accountability has worked because this has changed?
Sarah,
it might be you.
So, I mean, I guess just as I said, we are seeing some financial institutions already using these tools and putting them all together and starting to, you know, act on their exposure in their portfolios. So, I mean, the short answer again would be, you know, as soon as we kind of bring it together, hopefully we'll start to unlock more action from more financial institutions. So in terms of the project timeframes, we're hoping to have a kind of testable version of the database early next year, and then be working with the working group to improve it and build it out from there throughout next year. So, you know, hopefully in a year, 2 years time, we'll start to see more financial institutions using it and starting to see greater pressure on, therefore, companies to be improving their disclosures, improving their practices, and driving change on the ground.
And then can I ask you to get a crystal ball out and say, you know, in 2 years, in 5 years, I mean, clearly we hope that this project is going to work and going to continue to grow. So can you see yourselves adding new data initiatives into this as kind of the need arises? Is that the idea? Absolutely,
yeah. So as part of that kind of process of mapping the gaps in the existing data sets, once we've brought them together, certainly, you know, we'll be looking at, can we expand our data collection to fill those gaps? But we'll also be looking at, are there other data sets already out there, other partners that we can bring in to fill those, you know, to build off all the work that's already going on in this space.
Ciaran, we've got quite a detailed and technical question for you about trace data. So sit back, you know, relax, and answer this. So trace data is slightly different from, I suppose, the other data that we're talking about, because it's quantitative in its assessment of deforestation risk. But deforestation risks due to supply chain transaction are filled in less than half of the data. So if we are looking to assess average relative deforestation of some companies, how do we fill the missing data? I mean, that is one of the challenges with Trace, isn't it? That there are still data gaps.
Yeah, I think this touches on a really good point, that data on financing, legal entity data, supply chain data, it's notoriously messy. It can be difficult to process this and to integrate it with a range of sources. So within Trace, there is an element of estimation that fills in part of the picture of a financial institution's deforestation risk. And we base this on their exposure through direct financing of commodity traders for specific commodities that are mapped by the supply chains program. Going into very granular details, tracing commodities down to individual producers is a monumental task. So for us at the moment, we map the middle of the supply chain. How you would treat the missing data is a really good question. It's one that we often come back to on how we address this. And once we find this magical answer, I'm sure we'll be happy to share it with everyone.
The question asks, and I slightly garbled it, but it asks at the end, is it reasonable to replace the data with the average regional relative deforestation? Is that what you do at the moment? Is it okay to do that?
I think at the moment, if you have a reasonable proxy such as that, then it is okay to go forward with this until such a time as more reliable data can be obtained. The long and short answer, yeah.
Thank you. I just wonder whether, James, if I come back to you, because of the point of this project is we want to work with financial institutions. What this is trying to do is it's trying to provide solutions to financial institutions. Do you think in a year's time it will be reasonable to, I mean, if Credit Suisse reran that survey that it did earlier this year, where a load of people said, we're worried because there are so many data gaps. In a year's time, are those data gaps going to have disappeared? Is it not going to be possible to use them as an excuse because projects like this are filling that void?
I would love to use the same short answer as I had before and say yes, but I think that would be a little bit fanciful. I think the journey will be a progression, and there will be a vast improvement in the data points, but I would think it would be too much to expect that we'd see a significant change over a 12-month period. I think the important thing to note, though, is the level of appetite from all users, from the financial institutions, from the companies, and everyone in between, to get a better understanding of the exposures, and to really be able to really show where the risks and indeed the opportunities lie. And so because of that appetite, we will definitely see significant improvement over the next 12-month period. So an almost yes would be the answer.
And just a quick question to probably Sarah, but I mean, the aim is that this data is going to be open access. That is the kind of theory behind this project.
So yeah, a huge amount of the data from these different initiatives that we're bringing together is open, and absolutely, you know, the aim is to maintain that open access. As we said, we may be expanding to include other data sets, not all of which may be completely open access, including, you know, financial data sets to make sure we've mapped companies to identifiers, for instance. So there may need to be elements of, you know, kind of a level of free access and then a level of paid for access to unlock those data sets, just so that we can integrate data that we have to pay for and, you know, cover those costs. But wherever we can, you know, it's still a big part of our ethos that we make data as open as we can.
Thank you all very much for giving us your time. Thank you very much for your questions. I think I can safely say that we were much more interesting than a panel discussion at the Conservative Party conference. So congratulations to everyone. This has been a very quick tour through the Aligned Accountability Project. It's a database that we want to work for financial institutions. It's a database that we want to work for everybody. So feedback is always welcome. Please tell us what you think. I ought to say, I mean, Sarah did mention it, but this is a project that's been made possible through funding from the Norwegian government, sort of an ICFI initiative. So thank you to them. Thank you to James, to Sarah, to Ciaran, to Sam, to Emma for laying out the project so clearly. You're all free to go. Thank you very, very much. Have a lovely day.
Thank you.
Thank you, Darren. Thank you, everyone.
Thank you, everyone.